The revised legislation on the Tobacco Generation Endgame or GEG will be tabled in the Dewan Rakyat for first reading come June 12th. That's 3 days before the current sitting is due to end. Health Minister Dr. Zaliha Mustafa said the revision includes reducing the fines on offenders to 500 ringgit from 5,000 ringgit previously and replacing prison sentences with community services. The new approach is to be less punitive and more educational. The revision also removed provisions against ownership of tobacco. This means there won't be body searches by enforcement agencies. Under the latest amendment, tobacco control will be divided into two categories: the conventional ways of smoking and cigarettes with heating devices like vapes. If passed, the new law will prohibit with immediate effect the sale and use of conventional tobacco products to those who were born after January 1st, 2007. Enforcement with regards to cigarettes with heating devices will only be implemented at a later date. Putrajaya will make it mandatory for builders of housing projects in the capital to include affordable or low-cost units in their developments. Prime Minister Datuk Sri Anwar Ibrahim said the government's target of providing more affordable houses for the people has not been met, hence the need to set such a condition on housing developers. Housing is a serious problem in Kuala Lumpur, with 3,000 applications received in a year for affordable housing or low-cost homes under the government-subsidised People's Housing Projects or PPR initiative versus the 300 units actually available from City Hall. According to a Bernama report, the necessary changes are in the works, following a meeting chaired by the PM, and future projects that do not meet the new requirement will not be approved. On the stringent conditions imposed on would-be tenants of PPR that are said to be preventing certain applicants from renting the units, he said he has asked City Hall to make some adjustments. Prime Minister Datuk Sri Anwar Ibrahim defended Bank Negara's recent move to hike the overnight policy rate as higher borrowing costs and the sharp depreciation of the ringgit unnerved Malaysians. Anwar, who's also the finance minister, said again that the recent weakening of the ringgit is mainly due to the strengthening of the US dollar and that the local currency is not the only one in the region that has slipped in value. He told Parliament today that the central bank believed it was prudent to raise the key interest rate gradually in adjusting monetary policy, and pointed out that the Singapore dollar became stronger following the Republic's more drastic rate hiking campaign. Anwar also pointed out that although the Singapore dollar and Indonesia rupiah have performed better, both countries also adopted relatively harsher measures to defend their currencies, including removing incentives or aggressively cutting subsidies. While Malaysia intends to also lower its fiscal deficit, Anwar said the government will take a more gradual approach. The ringgit closed lower against the US dollar today, weighed down by concerns over China's economic and financial stability, as well as weaker oil prices, an analyst told Bernama Newswire. At 6 p.m, the local note traded lower at 4.6055, 6100 versus the greenback, compared with last Friday's closing of 4.5745, 5785. Citing SPI Asset Management Managing Director Stephen Innes, Bernama said the US dollar may have weakened following soft US services data, but the ringgit was not able to capitalize on it due to the currency's strong connection to China's risk sentiment. The struggling Chinese yuan and weaker oil prices are not helping. Oil prices are down following an announcement by the world's top exporter, Saudi Arabia, that it would further cut output. At the time of writing, Brent crude was down 1.6% at $75.46 per barrel. The government awarded Ahmad Zaki Resources, or AZRB, a letter of acceptance for the Cameron Highlands road plan and bypass project, which is set to commence next Thursday. In a Bourse filing today, the group revealed that the contract value is 122.5 million ringgit and that it is for a duration of 42 months. The road plan and bypass project consists of two site locations, namely the McDonald's Roundabout Time Tunnel Museum, which will bring about about the upgrade of the 1 kilometre long FT59 route and KF Farm. The contract is expected to contribute positively to AZRB's future earnings. Its shares settled 3.57% higher at 14.5 cents at the close, translating into a market capitalisation of 86.7 million ringgit.